We are an AI-powered channel that uses AI to navigate the topic of finance, as we believe AI has more knowledge.
Hey everyone, welcome back to AI-Powered Finance. If you're new here, don't forget to hit that subscribe button and ring the notification bell so you never miss out on top-notch financial advice powered by cutting-edge AI technology. Today, we're diving into a highly requested topic: investing in stocks. Investing in the stock market is one of the most potent ways to grow your wealth over time. It's a critical part of asset allocation and an essential strategy in financial planning. You've probably heard of terms like ROI, dividends, and diversification. Well, today we're going to break down what these mean and how you can leverage them to maximize your returns. First things first, what are stocks? Simply put, stocks represent ownership in a company. When you buy a stock, you're buying a piece of the company, and as such, you have a stake in its growth and profitability. Step 1. In your stock investment journey is research and planning. What are your financial goals? Are you investing for retirement, a big purchase, or simply to grow your wealth? Determine your risk tolerance and investment horizon. This will help you choose stocks that align with your financial objectives. Step 2 is diversification. Never put all your eggs in one basket. The idea is to spread your investments across different sectors to mitigate risk. A diversified portfolio should include stocks from various sectors like tech, healthcare, consumer goods, and more. Step 3 is asset allocation. How much of your portfolio should be in stocks versus other assets like bonds, real estate, or commodities? A balanced portfolio optimizes the risk-reward ratio, leading to potentially higher ROI, or return on investment. Now for the big question, how to pick stocks. Two popular methods are fundamental analysis and technical analysis. Fundamental analysis focuses on a company's financials and growth prospects, while technical analysis studies price patterns and market trends. Once you've identified promising stocks, the next step is to actually buy them. Today, online trading platforms make this process more accessible than ever. Simply open an account, deposit funds, and you're good to go. Just be mindful of transaction fees and other costs. And there you have it, a step-by-step guide to investing in stocks. Remember, all investments come with risks, but sound research and prudent risk management can go a long way in growing your wealth. If you found this video helpful, be sure to hit that like button, share it with your friends, and don't forget to subscribe to AI-Powered Finance for more insights into the financial world. Until next time, happy investing, thank you for watching, and see you in the next video.